One luxury stock just went on sale. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Pretty quiet day on Wall Street, considering that two of the biggest drug makers reported earnings today. Solid results from Merck and Pfizer, helping to keep the Dow index afloat. Joining me in studio today, Isaac Pino and Jason Moser. Guys, our top story, fourth quarter revenue for luxury brand Coach came in much lower than expected, and shares got hit. To make matters worse, Coach announced that both the company's chief operating officer and the president of the North American group are leaving. That is never a good sign, even if it's for perfectly valid reason. When that kind of leadership exodus takes place on the heels of bad earnings, no surprise the stock is down.
Chris, I am sensing skepticism on your part.
I'm just saying that is the way it is.
I think you're right. I think you're right to be at least a little skeptical here. I mean, it was not that bad of a quarter. I mean, let's be frank here. They grew the top line in their international segment and the domestic market here in North America. But I think there are definitely some leadership issues there. We knew that Lou Frankfurt was going to be stepping down and that Reed Krakoff is gone. Yeah, whenever you have kind of a changing of the guard, I actually kind of like it to see everything kind of happen at once as opposed to sort of piecemeal. So I'm encouraged that maybe they can get Victor Luis's strategy in place. And let's not forget that Victor Luis led them to the success that they've witnessed in their international operations to date. So, you know, I mean, I should have brought my Coach briefcase up here because I could probably make everybody a believer that these guys actually produce some good stuff here. I think this is a short-term blip, really. I think Coach is a very strong brand. It still has a lot of things to look forward to.
The challenge for any retailer is sort of managing that store footprint. When you look at the job Coach is doing, what stands out to you?
Well, I think it is important to focus on the products with a company like Coach. And so, you know, one of the announcements that caught my eye was the emphasis on opening more stores around the outlets, you know, the lower end, essentially part of their brand, and actually cutting back some of the stores, moving from, I think it was closing 16 of the traditional retail outlets and opening only 2. So not a lot of expansion on the brand building part of Coach, which is really important. You want to make sure it's still resonating with consumers, and you have to question if they're going into a low margin part of their business.
When you look at the shares today, you look at this kind of pullback, does it represent a buying opportunity?
I think it does. I mean, I own shares myself, and while I would tell investors to not be hasty on a day like today, I think you have to look at Coach really for the next 5, 6, 7 years down the road here and what they have coming in store, because their international operations really have the chance to expand not only in Europe, where they bought out their joint venture partnership here, but also the Middle East, other places in Asia, Latin America. So I think there are plenty of things to look forward to with this company as long as the new leadership team in place is able to nurture that brand and maintain sort of that brand reputation it's held to date. I think there's still plenty of room to run, and investors ought to give the stock a close look.
All right, let's get to some of the day's movers and shakers. U.S. Steel down after reporting a loss in the second quarter. Higher repair and maintenance costs getting part of the blame. Global supply and demand also probably part of the equation here too.
Yeah, I mean, short-term global supply and demand factors into it. You think long-term, though, steel is going to be in high demand. But can U.S. steel makers still compete with the international competitors? Their cost structures aren't ideal. They have high pension costs. They need a new CEO, who's currently the understudy in Mario Longhi, to come in there and really take some big swings at these large, excessive costs so that they can be competitive against the rest of the world.
National Oilwell Varco's second quarter revenue rose 18%, but profits were down 12%. And the stock was down on the results. What do you think? This is one you watch closely.
It is, yeah. I was surprised, actually. Their results sort of ran counter to what we've seen a lot of other companies. They were able to really grow that top line, had a little trouble bringing it down to the bottom line. But, you know, National Oilwell Varco has the nickname of no other vendor in the energy business, and that's for good reason. They make these little acquisitions to really expand their scope of services and products that they offer, and they just cover this whole array of the oil and natural gas space. And so gross margin took a little bit of hit here this quarter. There's a little bit of a pricing issue. That could be, I think, a short-term concern, but all in all, I mean, the long-term picture of this company still looks very good. They doubled their dividend over the quarter, still generate plenty of cash. I like the long-term picture.
Shares of Potash Corp getting hammered after a Russian component of one of the world's largest cartels pulled out of the cartel. Any story that involves Russian cartels, I'm a fan of. But this is really a tough day if your business is making fertilizer.
Yeah, definitely. And it's actually one of those stories where I was, as an investor, thinking, all right, potash makes a lot of sense. You know, agriculture, very important, population growth, all of these different factors. And potash is a huge ingredient in fertilizer. And luckily, I didn't pull the trigger on these stocks too soon because the dynamics of the market are very complicated. You have a big producer pulling out in Russia and kind of breaking up what, one of the two big players that controlled 70% of the market. And all of a sudden, prices are falling out from under, so are some of the stocks. So one that you really want to step back and kind of evaluate whether you understand what could happen in the future before you jump into it.
And finally, earlier this month, Barnes & Noble CEO William Lynch quit his job. Now comes news that the bookstore is restating several quarterly financial statements dating back to early 2012, and the hits just keep on coming for Barnes & Noble.
I think if you look up salt in the wound, you'd probably just see a link to this story right here. I mean, for a company that had so much relevance in our society 10, 15 years ago, just a simple business model of selling books, and people love to read. But, Amazon has really thrown that whole thing, disrupted the entire industry with the Kindle, and now all of a sudden Barnes & Noble is trying to be more things to more people. They haven't been able to pull it off, and this has really just been sort of the icing on the cake. Anytime you have to restate your financials, that's not good. And when you're Barnes & Noble, it's really not good.
All right, that's going to do it for Tuesday. Let's look ahead to the rest of the week. Isaac, what's the stock you got on your radar?
So I'm going to be watching SodaStream. They report earnings tomorrow, and this is a stock that we talk about quite often. They've been in the news mostly due to the speculation about a buyout of SodaStream by one of the big players, but that's cooled down. So we'll look at the fundamentals of the business and see if it's growing. As a shareholder, I'm pretty interested to see how it turns out, and I'm cautiously optimistic.
As a shareholder, are you hoping for a buyout?
I'd like to see SodaStream kind of go its own route.
Go its own route. All right, Jason, what about you?
Hey man, swipe it, right? I mean, the electronic payments market still has a lot of room to run here. And if this number is even close to correct, I mean, 85% of the world's transactions are still conducted in cash and checks, which I'm just floored by that. But my company, Tomorrow MasterCard, stands to benefit significantly from this. And so just be paying attention to their growth in transactions, growth in volume. It's a solid company with a great CEO and a wonderful Glassdoor rating. We have it in Motley Fool 1 in our EP portfolio, so I'll be excited to see what they have to say tomorrow.
Any chance MasterCard buys SodaStream?
No.
None. All right, for Jason Moser and Isaac Pino, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal